Hey guys, so in this video, I wanted to tell you that this stock can actually change your life, becoming one of the multi-baggers. So please make sure that you watch this video till the end, that why you need to invest and what are the main reasons which I'm about to tell you. First of all, as you're seeing on the screen, the name is called as Rites Limited, right? And this company is basically into industrial support services. I'll tell you what is that in the further on of this video. But if you just check out the maximum chart pattern of here, it was recently launched, I mean, just 3 to 2 years ago. It was at 165 rupees and it touched an all-time high at 328 rupees, right? And I also gave a call to buy rights at 235 to 40 levels. As of now, it is at 272 levels. If you want to see the proof, it is right there that I told them to take rights at 235 to 40 levels in my Telegram group, right? And my trade level was around this thing. As you can see, stop loss of 1.37 rupees. It came even down to around 238 rupees. That was the exact time to buy near this trend line which it recently broke, right? And if you see how the target was at 7% rupees over here, this is how you need to trade. And if you actually see that how did it actually give me good profits, it was right now at 272 levels, giving a great breakout, even more than our targets. So why is this huge volume coming now after such a great consolidation, which its all-time high was around 326? To let you know, first of all, rights is really great because its intrinsic value is less. Because like if its actual value is way more than what it is trading right now, right? And it could be the next LNT is what I feel. Coming into the returns versus FD, yes, it is giving better returns than FD. And now coming into the entry point, whether is it good to enter right now? Yes, because it is not in the overbought zone, right? It is still in the oversold zone. It is just right now started with its journey again, and there is no as such red flags because it has been managed by a government company. I mean, it is a government company managed by a very good management. Now, if I show you even more, the forecast, if you see, sorry, the financials, in a certain way, if you just see that its higher revenue growth is more than its, industrial revenue growth. If you see, it is growing around 8.77 percentage compared to the industrial growth revenue of 17.68 percentage on an average. Net income is just around 1% less, as you can see, from 14 percentage of itself to 15 percentage of its actual industrial. The main important thing that you need to understand is its increasing market share. It has increased its market share around from 16.92 percentage to 21 percentage, which is very good over the last 5 years for itself, right? If you see also the balance sheet over here, it has less debt to equity ratio, which is very good. The industry has around 46.85 percentage compared to this company's only 3.91 percentage, right? And the current ratio is very good as well, 163.45 percentage compared to the 142.55 percentage of the industrial. So this is an overall forecast of the group, which is very great in terms of here, right? And if you also see the PE ratio, it is also very less. It is trading right now at just 14.76 PE ratio compared to the industrial PE of 26. Again, a very good factor, right? Now let's come into the profit and loss statement. Going yearly, not quarterly, is what I believe should be looking at in the consolidated statements. If I show you over there, revenue has significantly risen from 1,294 crores in March 2016 to around 2,735 crores in March 2020. So almost the double, which is very, very great. Net profits also around 343 crores to around 626 crores over the span of last 4 years. Again, almost doubling up over here, which is again a very great news. Even if you see the earnings per share, which is very much important, from 33 rupees over here in March 2016, but in March 17 it dipped to 16.42 rupees, and then again it significantly rose to 24. There is a reason behind it, which I'm about to tell you. Why is that happening, right? It is because that they splitted the shares. As you can see, that the share capital over here was around at 100 before in March 2016, and after the split, obviously it was around 200 over here, as you can see, right? Which is around the worth over here. So that is why the earnings per share reduced from 33 to 16, but after that it significantly rose. The value is actually the same, but the shares have increased, and but earnings per share is also increasing. Now coming on, debt to equity ratio has also been increased 1.17 to March 2016 to 1.12 in March 2020, right? This is all consolidated statements, which is you need to worry about consolidated, mostly give the value to it, right? This is what I wanted to tell you for the balance sheet. So the financials also look very, very good. Now the one of the most important thing which I wanted to tell you is the return on capital and return on equity employed is basically that how much efficient the company is and how much returns are they giving you. And if it is a 10% above on an usual every year, it is considered to be good. But it is giving around 34.3 percentage over year on return on capital employed. I prefer companies giving more than 15 percentage, then it is considered to be a good company over the consistent years for a long time, right? Return on equity is around 25 percentage over here, which is very good, which means that if you've invested 1000 rupees, you're getting 25 percentage out of it on an average every single year, which is around 25 rupees over, sorry, 250 rupees over here, right? So this is very great. Sales growth in the last 5 years for the rights has grown around near 20 percentage, again a very good thing, and also profit around 15 percentage, which is very good again. Now coming on to the ratios, if you see return on capital, again, which I already told you, from 28 percentage to March 2020 at 34 percentage. Coming into the shareholding pattern, if you see promoters, as it was a government company, we generally are not allowed to keep more than 75 percentage. It decreased from 87 to 72 percentage, which means that promoter has a very good holdage in the company. FIS has increased from June 2018 to around 2020 by 0.13 percentage. DIIs have significantly increased from 4.12 percentage in June 2018 to around 16.04 percentage in September 2020. Also, the public has increased by 7.48 to 10.82 percentage. This is what shows that it could be the next LNT, which trades today at around 1,200 or something. And L&T, I mean, Rites is the next L&T is what I feel, because it is under all these sectors of operation. As you can see that it's in airports, architecture and planning, bridge tunnel engineering, many more. As you can see over here, it's also in the railway infrastructure, then railway equipment services, trainings, and many more things. If we can just go into the website, which is rights.com, which will tell you everything about it. Now, when do you need to buy is the exact point over here. I personally entered myself near this zone as I saw it breaking. And when it took over there, as I already told you in my Telegram group, which I shared, that Rights is about to break, right? So that is why I bought it over here and I've been holding it. So I'm getting a good percentage of around 4 to 5 percentage. And it has the potential to go its all-time high to around 328, giving you great returns over here, right? And now, what could be the next target in the future for it? It just listed in 2018. It could go back till 800 to 1000 if it continues to perform so in the upcoming years, is what I feel, which could make it a multi-bagger return. Right. So this is all for the video, guys. If you want to enter into the stock, make sure that you enter near over here only, or wait for a pullback around 265 levels, and that would be great. And if you just even buy it right now in the daily trend, it is still up. MACD giving right now not even a closer look. If you just see, it just started to give a crossover, right? So that is why I'm telling you the stock is great for investing and can give you great returns. If you like this video, guys, make sure you subscribe to my channel and also the bell icon notification for regular market updates. And also check out my playlist, which have many different videos on stock markets basics, fundamental, technical analysis as well. Until next time, guys, happy investing and bye bye.